Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'm going to guide you through my view of the sectors of the U.S. equities markets. Before we get started, just need a reminder that we are not broker dealers or investment advisors, doing this from an educational standpoint only, not giving any personalized recommendations or telling you to buy, sell, or hold anything. There's always risk involved in the markets. We can try to minimize it and manage the risk, but we can't eliminate it. And there is no guarantee, past performance, no indication of future results. Also, we're not subject to trading restrictions, so we can have a position as secure and initiate one at any time. You can stay in touch with me by emailing me at brandonwendell.cmt@gmail.com. That way you can give me some feedback, let me know what you'd like to see. Hit me up on Twitter. You can find me there at TraderBdub. I tweet pretty much every day. And you can also please hit the like button and subscribe. It helps us out a lot. And we will, if you do the alerts as well, you'll know when we have new videos popping up. So let me go ahead and move me to the downside there in the corner and jump into sector performance for the stock market for the week of April 30th. Starting off on the last 6 months, well, it's pretty much been the same. We saw the leadership and communication and technology, which is normally bullish. And then in the past month, we saw a gain in the safe havens. Although financials, for some reason, are showing pretty bullish, but a lot of the banks are getting killed. I mean, FRC and a bunch of others are dropping like rocks, so keep an eye out for that sector. Looking at the XLY daily chart, not much to talk about here. We are still just sideways as we were last week. It looks like we're going to continue on that sideways movement. I don't see any breakouts as of yet. On the XLC communication sector, we actually got a little bullish here. We pulled back to 38% retracement and then couldn't stay or close below 40 on the RSI, and that's bullish. So we popped up and are looking to break out. I wouldn't be surprised if we go above the 61, which is our next projection. I don't know if we'll be able to get to 64, but we should see some bullishness, maybe close between 61 and 62 by the end of the week. On technology, we are close to breaking out, but we barely have more momentum than we had before, so that is kind of tough. Typically, when you break out, you want to see an increase in momentum. So if that happens on Monday and Tuesday, then yes, we could push up towards 156. If not, expect us to get a pretty sizable correction back down to at least 148, maybe 145 by the end of the week. Looking at materials, this is a much weaker index. You can see we had a negative divergence, and typically after a divergence, if you get a peak in price, which we don't have yet, but if we make some sort of a peak where we're not above 60, expect us to break down, could even go below 77, this demand zone, but at least that is our target. So yes, it is a tested zone here, and it should go through, but it can't go through without momentum. We need to be above 60 for us to break out. And if we don't, look for us to turn at this 81.35, head down towards that 78 level. On energy, we had a bit of a retracement, but couldn't become bearish. We just closed the gap. That's it. So on Friday, you see we shot to the upside. It looks like we're making our new march up towards 91.08. Little inflationary. I mean, we should have been moving down much more because we had a divergence followed by a peak right here that was below 60. Well, again, we'll see. We haven't made a higher high yet, and we're still making lower lows. But if we can make a higher high this week, then we are probably going to continue to go, not this week, but maybe by next week up to 91. If we do make a higher high above this peak, which is Monday's high, expect us to close above 87.70 by the end of the week. If not, if we make a lower high by breaking to some new lows, expect us to possibly test this 78, 79 area. Looking at consumer staples, it was trying to make new highs, but lost the momentum. Now, we haven't finished by putting in a peak yet, so we could potentially go higher, but we need the momentum to pick up for that to happen. If this continues and we make a lower low on a candle, then we will pull back towards about 75.50, 76. On healthcare, we had, again, a little pullback going on, but we still haven't made highs, a peak in price below 60. So this may just be a small retracement before we project up to the 140 area, maybe even a bit higher. Well, I'm sorry, 137 is the next projection, then we go into the supply above. So as of right now, we had a small pullback. We didn't become bearish, okay? And we're trying to push higher, but we need that momentum to go above the prior high as we're breaking out of price to a higher high. On to XLU. Utilities is looking kind of weak. If anything, I think we're just going to be a bit sideways. Doesn't look like we're going to crash or anything, although we did get a bit of divergence again, higher high in price, lower high in the indicator. If we make a peak in price below 60, then yeah, we could drop pretty well. And the next stop would actually be, this is a little bit of demand here, 67.40. And it's also the retracement point, 38.2%. If, though, we can get above 60, we may be able to break and push up towards 71 by the end of the week. The financials. Again, I talked a little bit about some of the banks and the issues that are going on there, and we're seeing more cracks in the armor, if you will. And if we could try to recoup, we had what happened here with Silicon Valley banks. As we're rallying up, we need more momentum. If we don't get it, this is just a small correction before we continue to push downward, so watch out for that. And with real estate, this is looking a little weak as well. We are in a tested zone, but we don't have the momentum needed to make it to the next zone. And even if we do, we might stall out there. So if we are seeing bullishness this week, we're going to stall at 38.50. I don't see us getting above that by the end of the week. Most likely, again, is we try to make a new high in price and we're not getting above 60 with the RSI, talking about a close on a candle above 60. If that does not happen, expect us to turn around and push back towards 35.50. So with some of the trade ideas I went over in last week, I'm going to follow up on those. On EA, unfortunately, we didn't pull back enough down to our entry. We may be waiting for the earnings. You don't necessarily want to be in a long prior to the earnings on the 4-hour time frame. Just wait to see what happens with those earnings, then take action. It may drive us into demand to give us a good bounce. Looking at RSG, well, that was very bullish. Unfortunately, never came into our entry. Good earnings pushed us higher, so we have to abandon this trade. It's already gone through our targets. It did hit this area as a bit of demand, but oh well, didn't catch it. XL Energy, 90% of the time, it has a nice bullish run here, so actually that's supposed to end. Well, it's already ended the seasonal move, so we're kind of done with that. You see, it actually goes into a little bit of bearishness here, so we're probably going to have to give up on that. Seasonally, even though we're above the demand, it doesn't look too good, so we're likely to push down and maybe through the demand, so do not take the long. McKinnison, MCK, well, this one still has time left for the bullish seasonal window. You see it gets that last little oomph to the upside, if you will. And looking at that chart, we do have earnings coming up on May 8th, so over a week from now. So in the meantime, we're just kind of drifting a bit sideways. We'll have to see if that drives us into demand to let us in. I don't know if it will. ExxonMobil, this one also still has a little time left in the seasonal window. And it did break to the upside on the earnings. What I want to do, I mentioned before, I don't typically take the breakout. I wait for a retest of the area. And we saw that here. I guess that was Monday. We broke out, retested, and is now making some new highs. But the problem is you made a new high with the wicks. You're not getting that momentum there. So if you got in, you may need to take some profits or be more aggressive with your stop. If you did not get in, you may need to wait on this one and just pass, because that divergence is suggesting that we're going to come back into the range, maybe even to the bottom of the range. So be careful with that. As far as some new trade ideas for the week, actually, I don't have any. Sorry about that. So we'll go ahead and get those maybe next week. If you have any questions or anything you'd like me to talk about, please hit me up on email, brandonwendell.cmt@gmail.com. You can also follow me on Twitter @TraderBDub, and please hit like and subscribe. I really appreciate that. Thank you for being here and watching this video. Until next time, trade safe, trade well, and take care, everyone.